Basel, Switzerland. Central Bahnplatz, too. From the outside, it looks like just another glass and concrete office tower. 18 floors. A few flags out front. Unremarkable. The kind of building you walk past without a second glance. But what happens inside this building shapes the price of your groceries, the value of your savings, and the future of every currency on Earth. Most people have never heard of it. Most people were never supposed to. This is the Bank for International Settlements, the BS. It is more powerful than the Federal Reserve, more influential than the European Central Bank, more secretive than the IMF. It is the central bank of central banks, and it answers to no one. Every 2 months, behind closed doors, the most powerful bankers on the planet gather here. No press, no public minutes, no accountability, no live stream, just the quiet movement of numbers and gold. Trillions of dollars in real assets, managed in silence, hidden in plain sight. This is the story they never taught you in school. This is the history they buried beneath complexity and jargon so that you would stop asking questions. And once you understand it, you will never look at money or gold the same way again. To understand how this empire was built, you have to go back to 1930. The world was still reeling from the destruction of World War I. Germany owed billions in reparations to the Allied nations, and someone needed to coordinate those payments across borders. The answer was the Bank for International Settlements, created as a neutral clearinghouse for gold between nations. A technical body, an accounting mechanism, harmless on paper, nothing to worry about. Or so they said. Within a decade, quietly and without fanfare, the BIS had become the most powerful back channel in global finance. And when World War II broke out, something happened that should have ended the institution forever, but instead revealed just how untouchable it had already become. The BIS kept operating. Not just operating, it actively facilitated gold transactions between Nazi Germany and the Allied powers. Simultaneously, during a war, it accepted Nazi-looted gold, gold stolen from Jewish families, gold stripped from the central banks of occupied nations, gold pulled from the teeth of concentration camp victims, melted down and quietly processed through the most prestigious financial institution in the world. When the war finally ended, voices rose up demanding the BIS be shut down. The American delegation at Bretton Woods argued for its abolition. Norway moved to dissolve it entirely. But it survived. It survived because every nation, every winner, and every loser needed it. It had made itself indispensable. And in doing so, it had discovered the greatest source of power in the modern world. Not gold itself. Not dollars. Not armies. Secrecy. July 1944. The war in Europe was not yet over, but the Allied powers were already designing the world that would come after. 44 nations gathered at the Mount Washington Hotel in Bretton Woods, New Hampshire, with a single mission: to build a new global financial system from scratch. The deal they struck was elegant, simple, and built on a lie. The US dollar would be backed by gold at $35 per ounce. Every other currency on Earth would be pegged to the dollar. America held the gold. America controlled the anchor. And through the BIS network, the actual movement of that gold, the real bars, the true quantities, the genuine transactions, remained hidden from public view. A secret gold market. Prices managed. Quantities concealed. Power exercised in the dark. The promise to the world was stability. The reality behind closed doors was control. And for roughly 15 years, it held together. By the early 1960s, the cracks were beginning to show. America was spending at a pace it could not sustain. The Vietnam War, the space race, the Great Society social programs. Washington was printing dollars faster than it had gold to back them, and the world was starting to notice. The official price of gold remained $35 an ounce, but the free market wanted to pay far more, which meant the entire Bretton Woods system, the dollar, the reserve currency, the global financial architecture, was quietly under threat. So 8 of the most powerful nations on Earth made a decision, in secret. The United States, the United Kingdom, West Germany, France, Italy, Belgium, the Netherlands, and Switzerland quietly formed what became known as the London Gold Pool. Their mission was simple and ruthless. Keep the gold price at exactly $35 an ounce, no matter the cost. They dumped real, physical gold onto the market every time prices threatened to rise. Billions of dollars worth of real bars, flooding the system to maintain a fiction. This was price fixing on a global scale, coordinated by the most powerful governments in human history. And for 7 years, it worked. Then came Charles de Gaulle. In 1965, the French president went on television and told the world that France no longer trusted American promises. He didn't just make a speech. He dispatched French naval vessels across the Atlantic to physically collect France's gold from the vaults in New York. Not paper claims, not ledger entries, real bars of gold, loaded onto ships and brought home. The signal was unmistakable. Germany followed. Switzerland followed. The redemptions accelerated into a cascade that no coordination could stop. By 1968, the London gold pool had hemorrhaged so much real gold that it simply collapsed. The manipulation was over. The emperor had no clothes. But the system was not finished. It had one more card to play. August 15, 1971. A Sunday evening. Most of America was watching television when President Richard Nixon appeared on screen and made an announcement that would permanently change the global financial order. The United States would no longer exchange dollars for gold. The gold window was closed. The Bretton Woods system was dead. Gold, Nixon's advisors declared, was a barbarous relic, a pet rock, an outdated obsession of paranoid investors who hadn't yet accepted the realities of the modern world. Fiat currency, money backed by nothing but government trust, was the future. The message was clear. Gold doesn't matter anymore. Move on. Nothing to see here. Here is what they didn't tell you. Central banks never stopped holding gold. They never stopped trading it. They never stopped measuring wealth in it behind closed doors. The BS never stopped managing it. The whole hidden empire kept running. The only thing that changed was that they stopped talking about it publicly. Gold was demonetized in name only. In practice, it remained the ultimate reserve asset of every serious financial institution on Earth. The lie wasn't that gold lost its value. The lie was that it ever stopped mattering. With gold officially out of the public picture, Washington needed a new anchor for the dollar, a new mechanism that would force the world to keep holding American currency without the inconvenience of gold backing. They found it in oil. In 1974, the United States struck a deal with Saudi Arabia. Oil, the lifeblood of the entire modern economy, would be priced exclusively in U.S. dollars. In exchange, America offered military protection and political backing to the Saudi royal family. The genius of this arrangement was invisible but absolute. Every nation on Earth needed oil, which meant every nation on Earth needed dollars, which meant demand for American currency was essentially guaranteed, not by gold, not by economic productivity, but by geopolitical muscle and a quiet agreement in the desert. The empire adapted. It went deeper underground, and for 50 years it held. Meanwhile, in a concrete bunker in rural Kentucky, a question was quietly growing. The United States officially holds 8,133 tons of gold, the largest national reserve on Earth. Fort Knox. The name alone carries the weight of permanence and security. But the last full, independent audit of that gold was conducted in 1953, over 70 years ago. Members of Congress have asked to inspect it. Journalists have filed Freedom of Information requests. Auditors have sought access. All denied. All delayed. All deflected. In 1974, a brief press tour was arranged, a fully staged, highly controlled walkthrough with no independent verification of purity, quantity, or chain of custody. The burning question that nobody in official Washington will answer is this: has some of that gold been leased, swapped as collateral, pledged through the BIS network to back financial instruments that the public has never seen? The physical bars may sit in Kentucky, but legal, documented, verified ownership is a far murkier question than the official ledger suggests. A full, independent audit would answer that question once and for all. The fact that it hasn't happened in over 70 years is not an oversight. It is a choice. Today's gold market is not really a gold market. The vast majority of gold trading happens on paper, futures contracts, ETFs, derivatives, certificates, and digital promises. You buy a document that says you own gold, or a fraction of gold, or a claim on gold stored somewhere by someone under conditions you have never personally verified. Conservative estimates suggest there are more than 100 paper claims for every single ounce of physical gold that actually exists. 100 to 1. If even a fraction of those paper holders demanded physical delivery simultaneously, the system would collapse overnight. There simply is not enough real gold to honor the promises that have been made in its name. And when gold prices rise too quickly, when the paper illusion begins to crack under pressure, major financial institutions step in. They dump enormous quantities of paper gold onto the futures market in minutes, flooding supply, crushing the price, and extinguishing the signal that something is dangerously wrong. These are not theories. Major banks have been fined for manipulating the gold market. Not accused, convicted and fined. The evidence was documented. The penalties were paid. And the practice continued. The BIS coordinates the backstop. When paper pressure becomes too great, real gold moves quietly between vaults to prevent public panic. The system maintains itself through managed obscurity until the day it simply cannot. That day appears to be getting closer. Right now, in February 2026, the data tells a story that the mainstream financial press is not fully connecting. Gold climbed above $5,000 per ounce in early 2026, with prices touching $5,400 before pulling back. That is up from $35 per ounce in 1971, a suppressed, managed, manipulated asset that has still somehow appreciated by more than 15,000% over 50 years. In 2025 alone, gold surged 64%, its second-best annual performance since 1970. Not cryptocurrency, not artificial INT, Legend stocks, gold, the barbarous relic, the pet rock. Central banks are buying it at historic levels, over 1,000 tons per year for 3 consecutive years running. Poland's National Bank was the largest single buyer in 2025, adding 102 tons and bringing its total reserves to 550 tons, nearly 28% of its entire reserve portfolio. China's central bank extended its gold purchases for the 15th consecutive month in January 2026. 15 months without a single pause. India physically repatriated 100 tons of its gold from vaults in the United Kingdom, not just buying gold, but demanding physical possession of what already belonged to it. 95% of central banks surveyed now believe global gold reserves will continue to increase over the next 12 months. And then, in October 2025, something happened that barely made headlines in the Western financial press despite being one of the most significant monetary developments in decades. The BRICS nations launched a pilot of something called the Unit, a gold-backed digital trade settlement instrument allowing member nations to settle international accounts using a mechanism pegged to physical gold, completely bypassing SWIFT and the US dollar entirely. The institutions that built this paper system are quietly, systematically, and deliberately moving out of it. They are not doing this because gold is a barbarous relic. They are doing it because they know exactly what gold is, and they have always known. The paper gold system survives on one thing: confidence. As long as nobody asks too many questions, as long as nobody demands delivery at scale, as long as the illusion holds, the system holds. But confidence is not a commodity you can manufacture forever. When it breaks, it does not break slowly or gently. When large numbers of investors and institutions begin demanding physical gold instead of paper promises, prices will split apart. Physical gold will trade at a massive premium, or simply not trade at all, because there will not be enough to go around. Paper gold holders will discover what they actually own: a contract, a promise, a claim on something that does not exist in the quantity they were told. Wells Fargo and Societe Generale have already issued price targets of $6,000 to $6,300 per ounce by end of 2026. Central bank purchases for 2026 are projected between 773 and 1,117 tons. The reset is no longer a fringe theory. It is being priced in by the very institutions that spent decades building the system. History, if you are willing to read it honestly, leaves very little room for surprise. Rome debased its silver denarius to fund endless wars and social programs. The currency lost 98% of its silver content over 3 centuries before the empire collapsed into poverty and chaos, but the gold Romans held survived. Spain looted the Americas of their silver and gold in the 1500s and became the wealthiest empire on earth, then debased its own currency, printed against what it could not hold, and fell into poverty while the gold flowed to those who understood it better. The British pound was the world's reserve currency for over a century, backed by gold and the largest empire in history. When the empire crumbled, the pound lost its status. But gold endured. The pattern does not require a PhD in economics to understand. It requires only the willingness to read history without flinching. Paper fails. Gold endures every single time, without a single exception, across every culture and every era in 5,000 years of recorded civilization. The building in Basel is still there. The meetings still happen. The gold still moves, quietly, invisibly, in ledgers and transfers that the public was never meant to see. You were taught to trust paper, taught to trust banks, taught to believe that the system is stable, transparent, and fair. But look at what the people who built and run that system are actually doing right now. They are buying gold in record quantities year after year at prices they themselves spent decades suppressing. China, Poland, India, Russia, Turkey, nation after nation accumulating gold reserves at the fastest pace in modern history. If gold were truly a barbarous relic, an irrelevant holdover from a primitive past, why would the most sophisticated financial institutions on Earth be acquiring it at record pace with no sign of slowing down? They know what is coming. They are preparing for it, quietly, methodically, and deliberately, while the public watches paper markets and trusts the numbers on a screen. The hidden gold empire is not a conspiracy theory. It is a documented, verifiable, ongoing reality, written in the transaction records of central banks, the fine payments of convicted bullion traders, the 70-year silence surrounding Fort Knox, and the bi-monthly meetings in an 18-story tower in Basel that almost nobody talks about. History has the answers. And right now, in 2026, history is repeating. If this opened your eyes, you owe it to someone else to share it. Like this video, subscribe for more, and share it with someone who needs to know the truth.